What's good, everybody? It's Jonah. Come back at you with another video. So for this video, I'm going to do the recap for today for Friday, July 31st, 2026. So just want to preface it by saying that I did not trade on this day, and the reason for it is because if we go into the Forex Factory, on Wednesday we had FOMC, and usually my rules, right, I don't trade the morning of FOMC or any of the days that follow FOMC for the rest of the week. So that means Wednesday, Thursday, Friday, I was not behind the charts, not looking to take trades. Um, so jumping right in, right? Even though this is a non-trading day, like I tell you guys that in advance, whether I took a trade or not, because I want you guys to know, right? I don't want someone to step in there looking to see if a trade happened. If a trade didn't happen, then just leave and be frustrated, right? I want to tell you guys in advance. However, even on these non-trading days, these are still important, valuable videos for you to watch because I'm going to share with you important information that took place so that you guys can see and learn the algorithm, the like what's going on with price, right? How price books, how price delivers, because I'm going to sound like a broken record. If you show up to these videos each and every day, right, and watch them, I'm going to sound like a broken record because I'm going to repeat a lot of the same things because a lot of the phenomenon, the behavior in the market repeats. And if you're able to identify the repetition, that is what is going to allow you to one day become a consistently profitable trader because you're able to spot the patterns in the market. Being a consistently profitable trader is nothing more than pattern identification, right? Being able to spot something happening, a phenomenon that you've seen happen over and over and over, and then being able to capitalize on it, right? Wait for the opportunities to present themselves and then you take advantage. So even though I didn't trade on this day did actually provide a setup. And I'm going to show you guys what that setup is. You're going to see how that setup did in fact meet all of our confirmation and our rules, right? So to show you guys that this is in fact a legitimate model. So jumping right in, right? What we like to do is we like to first, of course, we check the news, right? Forex Factory, right? There's no news on this day, but once again, we're not trading on this day. However, on this day, right, we look for higher time frame bias on the 1 hour, right? So just want to let you guys know that usually when I'm behind the charts, I usually show up to the charts around like 8:45, like past 8:45, just because that makes it easier for me to spot my liquidity, like mark my liquidity pools. And after 8:45, it becomes a little easier for me to spot any it becomes easy for me to identify my high time frame bias. Now, for a high time frame bias, you want to basically identify the most recent structure on the 1 hour time frame prior to 8:30 in the morning, because 8:30 is when the hunt begins, the hunt for liquidity. So usually after 8:30 onwards, that's when price typically begins disobeying and breaking all market structure rules and logic because it's going after liquidity. So you want to find structure prior to 8:30 because that is when structure is typically legitimate and it typically holds, right? So on the previous day, we were naturally bearish, right? Because this was the range that we were working with, right? For both pairs. And now obviously you see that both pairs blasted through this high, right? You see price blasted through the high for both pairs. Now, if we look at the S&P, seeing this wick, right, came up and then this wick got cleared with this high, and then more and more highs kept getting formed until we finally reached this high, right? So prior to this high, where was the most recent swing point? It is down here. Now, of course, right now you're seeing that the swing point was not traded under, nor was this high traded under, right? So at first glance, right, we expect price to be bearish. Same idea with the NAS, right? You're seeing this price previously in this range, price went up and blasted through. You see price continue traveling higher. Now the highest point was this high right here, right? This candle high. And then I'll get us a little closer. And then you're seeing prior to this highest high move right here, you're seeing that this was the most recent swing point. However, what is the key piece of information that I tell you guys when determining higher time frame bias, right? The key piece of information is prior to 8:30. So if we mark the recent swing lows, right, you see this was the most recent swing low prior to its highest high, and this was the most recent swing low prior to its highest high, right? And I'm going to mark this out for you guys. So we still haven't determined the bias yet, because right now this is the 7:45 to 8 o'clock. So At this point, we have reached 8 o'clock. Now the next candle, this is the 8 o'clock to the 8:15 candle right here, right? You see when I hover my mouse over, it says 8 a.m. and we're on the 15-minute time frame. So this is from 8 a.m. to 8:15. So what happens at 8:15? You see a clear structure break. So this is what I mean when I say that it is important for you to follow your rules, because your rules are what's going to allow you to succeed in these markets, right? Because this structure break happened at 8:15, right? This low got cleared. And if we look at the 1 hour time frame, you see that this low obviously got traded through by 8:15. That means we are bearish because this happened right before 8:30. And it's not necessarily the case if you're on the 15-minute time frame. It's not necessarily the case for the NAS, right? Um, so price pushed down. So let's go on the 1 minute time frame to see what happens, right? So okay, also happens for the NAS, right? Because we marked out the low and you see this low traded under, and this traded under at 824. So for both pairs, right, they're technically bearish, right? You see price went under this level right here, right? So for both pairs, it you need to have been paying significantly close attention, right? But price has shown you that it has gone bearish. So most traders probably would have approached this day being bullish because they probably didn't notice the structure break that literally happened right before 8:30. So because the structure break happened right before 8:30, I am bearish on both of these pairs. So now jumping in at 8:15, right, I'll wait for the next candle, right? So this is the candle from 8:30 to 8:45, right? Here from 8:30 to 8:45, right? So now we look to the left to see where is the most recent swing high prior to 8:30. So this candle here, this is 8:15, 8:30. This is the most obvious swing high prior to 8:30. Now for NAS, right, this gold candle here, this is 8:15, 8:30. So we look to the left and then we see that this right here, sorry, this right here is the most recent swing high, right? Because these are not swing highs. This one is a swing high, right? So we have both of our swing highs. Now, from this point, we want to mark our potential targets, right? Because we are officially bearish, I want to mark my targets. So this was previously the London low prior to London, I guess you could say London lows, and that obviously was taken out with this push right here. So we kind of get rid of that. And we have this right here, which right now this would be the New York low for now. Then you have another low here. You have lows here, right? Obviously, you have additional lows here and down here, and then you have a massive fair value gap here, and then more lows, and then a fair value gap, right? You get the idea how, right? You can decide, how you want your targets to be formed or decided on. Me personally, these are the main targets I'm going for because these are the main targets for the day. Even though if we just turn bearish, right? You have one legitimate, swing up here, right? That looks like a price leg, and then this looks like another price leg, right? So you can decide the targets that you want to hit, right? But that's kind of what I have marked off initially, right? Now the same idea with the S&P here, right? You can mark, this would be the low of, if we look at the S&P, this would be the low of New York, right? The low of the session. Then you also have another lows down here, then other lows down here, right? So you're seeing all the targets that can potentially be marked. So now jumping into the 1 minute time frame, remember we are bearish. So ideally we want as many of these targets to remain intact because we want price to go up here, break structure, right? Give us an entry so then we could take price lower. Same idea with the NAS, right? We want to see price go up because we're bearish, and then break structure somewhere over here, right? Give us an entry in a fair value gap, and then go all the way down, right? That's what we're anticipating. So now we're just going to sit here and watch price and see what price decides to do, right? So now we are at 849 and we're just, skipping through the candles. So right now you're just seeing some consolidation and you're also seeing price begin making a nice rally up, which is a good sign because right now it's 910. So 910, we want price to eventually begin arriving up here because we want this to get taken and price make the high of the session after 9:30. So, and what you notice is you're noticing price also leave other targets, right? Fair value gap here, a low right here, right? Same idea with the S&P, another fair value gap, another fair value gap, right? You're seeing targets are left, which is a good sign because then there's more reason for price to want to go lower after it goes higher, right? And this is what you need to understand about price. We are expecting that after 9:30, after the stock market open, we are expecting that price is going to deliver a fake move, a fake rally. That price is going to push up, most likely to push up to get traders to think that price is bullish, right? Because they weren't aware of the breakup structure at 8:30, right? On the higher time frame to go lower, right? So we're expecting 9:30 to give us a fake move up, and then we're not looking at that move thinking that price is bullish. We're looking at that move thinking that price is going after liquidity, so then it can break structure and go back down, right? That's what we're looking for. So now if I continue fast forwarding price, you're seeing price is getting really close. So this is the 929 to 930, right? So the next candle that I hit next, this is the 930 open. So boom, what do you see? 930 open, you're seeing an aggressive bullish candle, right? At 930, it wicks, right? And it clearly purges the liquidity. So now after a liquidity grab, what am I looking to see? I'm looking to find a breakup structure, right? So on the 1 minute time frame right now, prior to this massive move up, what I'm seeing is that this is the most recent swing point, right? Because you can clearly see high formed here, and then price is high, right? This is a standalone candle, so that is the most recent swing point. For the NAS hasn't reached it yet, but you're seeing already bullishness, which is a good sign because it's likely for price to reach this level here. So now we're just going one candle at a time. Now you're seeing here NAS make the push up and clear buy side liquidity, and now the most obvious swing point is under here. So that right there, this is the most recent structure point on the 1 minute time frame for the NAS, right? And I'm at this point just steadily watching price because I don't necessarily have a preference for the two pairs because they're moving virtually identical. Um, and you know, everything kind of looks pretty much very similar, right? So I'm just watching both pairs at the same time to see if any of them are going to give us a breaker structure and the setup that we're looking for. So another push up, another push up. Now with the S&P, you're seeing it formed a high, but it formed a bearish candle. So if price wants to give us a break of structure with displacement, I want to see every candle after this one be consecutively bearish until it breaks this low right here. The NAS, we have not seen a bearish candle yet, so I'm still watching price. Okay, so you've seen a bullish candle move up and it made a new high, right? Obviously this wick is higher than this candle right here. So now if price gives us a bearish candle, right? After this, I want to see bearish candles all the way down. With NAS, you're seeing the first bearish candle form, which made the new high. So now at this point, if price wants to break structure and give us displacement, I want to see consecutive candles, black candles going to clear that low. Another bullish candle that made a new high. So now I'm waiting to see if NAS are going to is going to give us any bearish candles. Right, you're seeing the first bearish candle for S&P, right? First bearish candle after the high. That's a good sign. And the first bearish candle after the high. We still want to see consecutive candles. Right, we got two candles in a row, right? You're seeing two bearish candles in a row. Now we want to continue seeing consecutive candles until we get under this low right here. Another one, right? And you're seeing another bearish candle. So now price would need to break structure. Needs to continue going lower, right? Almost vertical, right? Because you're seeing the aggressive bearishness for us to take a trade. And obviously you're already seeing one fair value gap form right here. Still, I mean, there's a tiny fair value gap here, but this is super tiny as you would have to squint to see it for the S&P. Boom, right? You're seeing clear as day right here. Structure got broken. So for the S&P, I'm seeing a fair value gap here. Now, of course, there's still a big body, but we need to see another candle form right here with a wick to then see if it's going to leave a fair value gap over here as well, right? But right now, this is a tiny fair value gap, right? It unlikely to make a retracement into that gap. You have a legitimate gap here, and then you have a lot of space, but if you're looking for an entry, this could be a potential opportunity. But once again, if there's multiple gaps, then ideally you want to trade at the most probable gap, which is usually the first gap that prices go into. right? Now, if we look at the NAS, you're seeing here after this high was formed, how many consecutive bearish candles are you seeing? One, two, three, four bearish candles in a row. Our price was not broken yet, so we need to see price continue to be bearish and trade under this level so that we can consider it to be a structure break. And like boom, right here, like clockwork, price completely blasted on this level. So this is what I mean. Like when price does something like this, when price is that aggressive, like it it is like it's hard for you to miss this because its price is literally moving almost vertical. And you're seeing now what are the rules, right? You're seeing with this candle right here, it broke the low, right? So now we're bearish, right? Structure break on both pairs. Now what we want to do, we want to look at the displacement range from this low to this high, right? Where do we see fair value gaps? Now I'll put it in pink, right? For both pairs, right? This low to this high. Now where do we see fair value gaps? Now of course we went through it with the with the S&P, right? You have fair value gap here, and then you have another fair value. Well, this fair value gap doesn't count. Why? Because this gap is outside of the range, right? The fair value gap needs to fall within this exact range, and you see part of the fair value gap falls out of it. So if you were to take a trade, at least on the 1 minute time frame for the S&P, it would either be, you know, up here, or it would be right here. And of course, out of these two options, this is the most probable one because price has to travel through here in order for price to reach here, right? So if I were to take an opportunity on the S&P, this is what I'll be looking for on the 1 minute time frame. Now, obviously, you would have to check your 2 minute, 3 minute, 4 minute to see what appears. Right now, looking at the NAS, right, we're gonna see multiple fair value gaps. Right, you have a gap here, you have a gap here, then you also have a gap here. Now, out of these three entries, which one is the most probable? Right, of course, the most probable and the most likely is this low fair value gap, because in order for price to reach this gap or this gap, it has to first tap into this gap, right? So if you want to be as safe as possible, right, ideally you probably look for an entry up here. Now we would need to skip it one more candle because we would need to see if a fair value gap forms in here, which clearly it doesn't because this candle closes it. However, you're seeing, if I zoom in, you're seeing that price did in fact tap into this fair value gap, right? So we'll get rid of this and that, and we'll get rid of this. So you can see clear as day, right? That price blasted under this low with this aggressive bearish candle down here. So it fit our confirmation of what do you want to see? We're bearish on the higher time frame, remember, so we're expecting price to go down, so we're looking to sell, right? What happened after 9:30? After 9:30, you see a bullish rally, right? A push up, because we're expecting that 9:30 typically price does the opposite of what we expect, right? If we're bearish, we expect that 9:30 open would be a move up to trick traders into thinking price is bullish, so everyone could begin buying, and so price could take out all the buy stops, right? All the buy side liquidity that's resting above here, right? All the traders that think that if price breaks this level is going to continue going higher, right? Think about all the traders who trade breakout. They'll see this and right, they'll see these candles, see all these candles, and think price is breaking out to the upside. So everyone's just buying, but we know that this move here, right? This move here is in fact a push up so that price can sell. So price can be at the peak of the day, at the highest point of the day, and begin selling down, because when price went above this level, it activated buy stops, activated buy orders, which is a perfect counter for the sells. So price went up here and began pushing up to sell at the highest point to then push price all the way down and lower. And so, right, I'll get rid of this. So long story short, there's no trade opportunity that appears on the S&P, so I'm just going to, right, like these gaps basically remain open. Price never tapped into these gaps, right? So I'm just going to full screen the NAS for the time being, right? So you're seeing within this entire range right here, all these gaps, right? All these gaps, oops, sorry, these gaps, right? And you're seeing that in the gap that was, well, sorry. You're seeing that in the gap that was formed from this low to this high, right? That's displacement range. You're seeing that there was a fair value gap that was formed, and this fair value gap was in fact tapped into with this candle. So the moment you seen this candle push down and break structure, it doesn't have to close under, it just has to trade. It literally just has to trade under, right? The moment you see this candle trade under this low, that counts as a break of structure, and you want it to make sure it is um, a bearish candle that closes, that trades under. So once this candle closed, it met all the confirmations with a liquidity grab, a break of structure lower, right? You see displacement because you see God knows how many consecutive bearish candles, right? And then from the displacement range, right, from the low to the high, you're seeing a fair value gap get formed and price tapped into it right here. So I understand that this would be a very large stop loss, right? Because we put our stop loss above the high, right? I understand that. However, if you did in fact take this trade, now once again, I wasn't trading here on this day because this is still the tail end of FOMC, so I'm not looking to take trades. However, this does fit our confirmation for a trade, and price taps it and then immediately just begins blasting right through, right? So look at this. You would have, price would have tapped in your entry. Obviously, you have a massive stop loss, but price taps into your entry, and then you're in drawdown probably for like 2 seconds, and then price just goes in your favor immediately and blasts through, right? So the low of the day, right, because we're bearish, right, this is the low of the session, low of New York session. This would be a 0.95 or so almost a 1-to-1. So at the very least, going to your first obvious target, the first extreme logical target right here, this would be a 1-to-1. So a lot of traders are content with a 1-to-1. So it's actually not bad of a setup. Now, if we look at, you know, this right here, um this is literally the low of the day because it's like midnight open, right? So this is technically the low of the day, and this would be a pretty much a 1-to-1. And then if we look to the left here, this is one of the other extremes, right before the day started, right? You have another obvious low right here, which is about a 1.2. So me personally, if I were to have taken this trade, I would have at the very least closed like 80% of my position going into this last level, because once again, I'm not going to be greedy. There's going to be some days where price is going to give you a mega setup, and then there's going to be other days like this where price just completely expands and it gives you a massive stop loss and all that, but then price taps it and then it just goes in your favor. So literally you would have potentially entered this position, and then literally within 6 minutes, your main target, which is this low right here, would have been blasted through. So in 6 minutes, you could have, however much you risked, you could have made that in profit for the day, right? Now, of course, this isn't the only distance price trades to, right? It continued, going a lot further. So if, let's just say, you had additional targets for this low, this fair value gap right here, right? You're seeing price trade through it, right? You see this low right here gets taken out, even this low gets taken out, this low gets taken out, right? So you're seeing how price, we took an entry, and where did we enter, right? If we look at price exactly how it is, where did we enter? We entered at the top of the move, right? Because you're seeing with price pushed up here, you're seeing all of this liquidity get taken with this move here, right? So once again, there's going to be traders who think that market structure alone is king. Market structure alone is not king, because think about how many traders, think about retail logic too. Think about how many traders looked at this and thought to themselves, this is resistance. Why? Because one tap, two tap, three tap, right? Other traders, they see this as a triple top, right? Because price is clearly respecting this high, and so price isn't going to break through, right? So when traders see that this level starts getting tapped again, they begin doing what? They begin selling, and they put their stop loss above here because they don't expect price to break through this level. And then what does price do? It goes above it and takes out anyone's stop loss that was above here. It takes that out. And any traders who had buy stops, meaning that if price decides to go up, it would automatically trigger them to be in a buy order. Why? Because they're expecting that if price goes above here, is breaking structure to the upside, so that is going up. But we know that price pushed up here, not to go up, right? Not to go up, but it pushed up here to activate the buy orders that were here so that price can sell, right? So price can be at the very top and sell, because if price wants to go lower, it wants to sell at the very top. It wants to make the high of the session, right? This brown session is the New York session. So if price is going up here, it's going high. If we're bearish, we expect it to go high and make the high so that it can enter its sell orders and then push price all the way down. So just imagine being able to enter right here. You're pretty much entering near the top of the entire move to then ride price all the way down. So if at the very least you close off 80% at this low, right, which is pretty much the low of the day, then what that means is that you can have a 10-20% runner, and then this runner you can target additional targets, right? You can look to the left and target other targets here that have much better risk to reward, right? You can do all that if you want to, or you can also target specific risk to rewards, right? Let's just say right here is a 1 to 2, right? So you can decide, let me take off another 10% here at a 1 to 2, or you can say, okay, well, what's a 1 to 3? Right? Here's a 1 to 3. I'm gonna take off another percent, another piece right here, right? Or you can decide to, anytime price makes a new low, you can decide to take partials there. And then if price decides to make a low in the here, you can take partials here. Now I'm going to get rid of replay mode so you can see where we're at, right? So this is where we are at in real time, because if you look, right, obviously it is Friday, July 31st, right? So this is real time. Um, and the market is closed, which is why you're not seeing anything, right? Because this is the end of Friday, and then the next time frame at the bottom is Sunday, right? So we don't know what's gonna happen until Sunday. And what you need to also know, I do not trade for the entire month of August, and usually it's because August price moves a little funny, right? Like it doesn't really, the setups that you think are there aren't necessarily there, and so I just stand back the entire month of August and I just let price play out. So you won't see me trade, and I'm going to be on vacation, so I might eventually do breakdowns like when I come back. But you're seeing that price made this after the entry, right? Price made the aggressive push down, and then what happens after a lot of liquidity is taken, price begins pushing up, and then starts pushing up, and then with this move here, it begins breaking structure again, and now it looks like it's making its way down. So if we look at it on the 1 hour time frame, oh sorry, on the 15-minute time frame, right? You're seeing that price came up with a massive wick on the 15-minute to clear all this liquidity, and then it began pushing down. Now, what did price leave? A fair value gap. And what do we know about price? Price has a tendency, when it is bearish, to respect bearish PD arrays or premium discount arrays, or like price has certain behavior patterns. So if price is bearish, price has a tendency to respect bearish fair value gaps. We've obviously seen it with our entry. That's why we enter on fair value gaps, right? So you're seeing that price went up, and what did it do? It tapped into this fair value gap numerous times, and then now it looks like price is rejecting. Now of course we don't know what's going to happen. However, it is very possible, if we are in fact bearish, it's possible that price might want to go lower and most likely clear out these highs. Clear out these lows, because we are bearish. So we're expecting price to go lower and make new lows, right? And if you're like me, because usually when I have a runner, when I'm trading, usually I keep my stop loss at break even. So if price were to have gone down and hit these targets and make these lows all the way down here, I would have moved my stop loss to break even, right? So I'll be exactly at break even. Obviously you can see that this high did not touch where it would be my break even point, and so price is going lower. So that's why this trading strategy is so powerful, because you're trading in alignment with the trend, and so you can take out low hanging fruit, right? Easy targets for price to reach for, which with this aggressive move down, it cleared a lot of liquidity, right? All these liquidity points, right? And then if, let's say, the risk reward wasn't necessarily the best because you had a large stop loss, or you still think price is going to run further, or you trade on an intraday basis, but then you also want to swing it to higher time frame targets, right? We're on the 15-minute time frame. You would have an entry up here, and then you could swing the entry that you took, right? The little runner that you have, you could swing it to go for these lows, or potentially these lows, or potentially this fair value gap, or maybe you can have a super small runner, say it's like 5% of your total position, because you're expecting this low to get taken out or for price to make an extreme low all the way down here. Obviously, the further your target, the less likely it is to reach, right? Because you have to remember trading is a game of probabilities. And typically if price has like a swing, right, like one leg of price like this, then typically price makes very similar like price legs. Um, However, in this case, if you took this trade, you could have potentially had a runner, right, still at break even, and then you can hold it over the weekend, and then when you return, right, you can just continue if you want to, right? If price goes under here and makes a new low, then if you want, you can move your stop loss here, or you can trail it, right? Or you can set like new targets or whatever, right? You can manage the trade how you like. This, like, I'm showing you guys this because this is the algorithm. This is the machine at work, right? And it's only when you realize that this is the game that's being played, right? That price, like I mentioned, usually at 9:30 it's very common for the move to happen to be the fake move, right? And this move right here was in fact the fake rally. It was just a rally to push price up so that it can activate these buy stops and buy side liquidity so that price at this level can begin selling and placing its sell orders. Now look, when price goes up here and begins selling, look how aggressive this move is down. It's just nothing but bearish candles, right? So this is what we want to see. This leaves like no doubt whether price actually wants to go lower, right? And you see, because it's pretty much price is damn near vertical after the high gets taken, that tells you that price is literally moving so rapid, it's almost moving out of control. And so it's expected that price is going to want to continue lower. And here you see, right, price came and tapped a bearish value gap before just completely blasting right through, right? So showing you guys this because this phenomenon repeats. And if you look at all of the different, if you look at this entire week from Monday to Friday, you're seeing even though I didn't take a single trade this entire week, you're still seeing that this phenomena is happening almost every day, that we can have a bias, and you're seeing that price and many times go after our point of interest, the liquidity that we've highlighted. Price will snatch it and then begin moving in the opposite direction. So even if price doesn't give us an entry or price doesn't go after the liquidity, or right, like, you're still seeing this happen. So if something is happening over and over and over, right, something is repeating, then if you're able to spot that repetition and then you're able to plan for it, then you can expect it. And then if you're expecting something, right, then you know that if you show up for a trading day and price does not give you this, it doesn't give you a setup, then you're perfectly fine walking away because you know that this is going to show up at some point in the future. It is inevitable to happen because this is the machine. This is what continues repeating with price, right? This is never going to stop because this is the market, right? Some traders think that, oh, if you understand this, why would you share it? It's like, well, because this is the market, right? Like, the market already beats 90% of traders, so it's already winning. And so if it's beating most people, then it's not broken, right? There's going to be some people to figure it out, and the people that do figure it out are the people that get to profit from it, right? So you learn this, you understand this, you're going to be in the minority of people who understand this. You're going to be in the minority of people who are selling at the highest point, right? Because most traders, when they see price make a new high, they buy, right? Think about the Bitcoin craze, right? When Bitcoin was making new all-time highs and it was everywhere in the news. What were people doing when Bitcoin made a new high and it went up here, right? Everyone started buying because they're like, oh my God, Bitcoin is at a new all-time high, is going to the moon. Not knowing that if you wanted to actually buy Bitcoin, you were supposed to buy it at the bottom, right? To then ride the wave all the way to the top. And now if Bitcoin is making all-time highs, most people are getting excited, most people are celebrating, they're buying it, but they're buying it at the very top, expecting it to continue going higher. What that means is that they're looking to do something like this. They're just looking to like go long when price is already at a premium, when price at the top, right? You need to understand how the market works, right? Like, the market also goes off of people's emotions, right? Think about when, like, most people, when they see price make all-time high, they're afraid to sell because they think, well, what if price just continues going higher? Well, price will continue going higher likely if there's no breaker structure and no displacement and no fair value gaps or none of that, right? Then price is likely to continue going higher. But when we see a breaker structure, this is how the market communicates, right? We see a breaker structure, we see a fair value gap and price tapped into fair value gap, and then we also see aggressive displacement. To me, that's all the signs that you need to be confident that the market wants to reverse on top of higher time frame bias, which on a 1 hour time frame is telling us that it most likely wants to go lower. So that's what we're looking to do, only sell. We're not looking to ever buy on this day. So this is the reason why this is difficult for traders to learn and understand, is because this is like counter to the way most people think. When most people think price goes high, they think to buy. They think, okay, price has proven that it's gone higher, that it wants to go higher, so that means it wants to continue going higher. But with trading, like, you succeed in these markets by anticipating certain things happening, right? When you trade, realistically, you're not supposed to know. You're never going to know what's going to happen next. You're just going off of the clues and the information that price is giving you, right? I'm never going to know what's going to happen next, but I'm just going off of the information I'm given. And based on all the information, everything checks out. All the clues check out for the signal or sign that price wants to go lower. And clearly it did, right? So because this happens over and over and over, I just need to wait for it, for the phenomenon to appear, and then I take advantage of it. So this is the strategy. This is it playing out, right? And once again, I didn't trade on this day, but if I were behind the charts actively trading, I would have taken this trade because price did tap into fair value gap and it met all the confirmations. So this would be a legitimate trading day, and you're seeing, had you taken this entry, clearly, right, it wouldn't have been the best stop loss, right? But clearly you're seeing that you would have made profit and things would have worked out. So even if you missed out on this, or even if you didn't take it, right, this whole setup right here, this should give you confidence and belief that this is what's happening, that this is what's in fact repeating in these markets. And so if you're able to understand this and learn this, you can succeed in these markets. So and sorry, before we end it off, right, you're seeing with the S&P, right, you're seeing it left gaps. Right, this gap wouldn't count because this gap is outside, right? You got the low and the high, and then obviously this gap is outside of the range for this low. So this gap right here wouldn't count. So you would be looking for potentially this gap up here, and obviously price only goes up to this high, and then it just blasts lower. So there's no, right, and then after price blasts lower, obviously you're seeing that price went and took out all the targets. So with the S&P, there was no entries. It was everything else as far as our confirmations checked out with the S&P, but there was never any entry, so there's nothing for you to do, right? The only entry would have been right here with the NAS, and then obviously you would have made profit on the day. So you're seeing how this strategy not only keeps us safe, and it weeds out a lot of trades that aren't going to deliver. This strategy is honestly is literally perfection because it's everything I could ever ask for. It's not only is it risk management, it's also very strict so that price needs to deliver and needs to follow certain rules. And when it does follow the rules, right, you're seeing that price delivers, and in more cases than not, it does in fact deliver. And so you will have the confidence that if an opportunity does present itself and you take it, that most of the time it is going to work out in your favor, and most of the time you'll walk away a winner. So it's just a matter of you being patient and waiting for these setups to appear so that you can ultimately win, and that is how you ultimately become a profitable trader. So that wraps up the video. Enjoy the video. Do leave a like and subscribe as you're on the road to me subscriber, guys. So once again, it's Joel, and I'm out. I'll see you guys for the next video.